Thank you very much for logging in for our sort of program today, which is to talk about R&D, which is research and development for construction. I'm going to go to the next slide. I'll give you a little bit of background. First of all, we have a technical team behind me because I can't be trusted to click the mouse and talk at the same time. So there are technicians behind me looking for subtle hints as to when to click the page. I can't do subtle hints, so I'll either go like that or say next page please. So anyway, basically if you have any questions as you go through today, you can click on the question and answer button at the bottom of your screen and you can write your questions in there and I will endeavour to answer them. If there's something particularly complicated or lengthy, I'll give out my email address. You can always email me after and I will come back to you. I would like to say today or tomorrow at the latest with an answer to your questions. Next slide, please. So we are Raffingers. My name is Neill Staff. I think my profile comes up on the next slide, but I'm the tax partner here and I'm essentially responsible for all of the nasty HMRC inquiries and also the research and development that we do. The previous slide points to what we are and what we're about. I'm not going to talk at length about Raffingers. We are a big firm, we're a good firm. We certainly specialise in R&D and the various things that you see there. But I'm going to get on to the more interesting stuff, which is R&D. So next slide, please. Little bit about me. So I'm the tax partner here. For my sins, I worked at HMRC for 20 odd years as a senior investigator, but it's okay. I'm cute and cuddly now. I left in about 2004 and I've worked for a number of large accountancy firms as a tax specialist. At the moment, our track record, it says, I think that's a little bit out of date, qualifying R&D expenditure in excess of 28 million. We're miles past that now. I think we're in this particular firm, we're moving up towards about sort of 50 million and the tax savings are sort of a lot more than 5 million as well. So we can go to the next page on that, please. Right, so I'm going to start with the misconception and then move swiftly and seamlessly to talk about R&D in construction. As it says on the slide, R&D can only be claimed a common misconception by technology or pharmaceutical companies, and the nature of the research needs to be very grand or earth-shattering. Possibly not now as much, this misconception, but certainly in the past, there was a misconception that unless you were, I don't know, developing a cure for cancer or the common cold or sort of all sorts of drugs, then R&D wasn't for you. I lecture a lot on R&D. I see an awful lot of clients, potential clients. I also go and see other smaller firms of accountants that are perfectly good at what they do, but perhaps R&D isn't quite in their skill set. And there is this misconception that it can't be anything unless it's some sort of earth-shattering and benefiting mankind. It doesn't have to be. As I'm going to show today, I'm going to talk about R&D in the construction industry, and certainly maybe even as recent as sort of 2 or 3 years ago, I think it was a common theme, even amongst R&D practitioners, that construction industry wasn't necessarily an area where you could look for sort of R&D, but through looking more closely at the activities of building companies and contractors, etc., we've found that claims can be made, and HMRC have looked at them very carefully and agreed them. So basically, next slide, please. We'll talk about what R&D is, and then we'll start applying that to sort of construction industry and take it from there. So per the slide, what counts as an R&D qualifying activity? Now, I'm not going to read the whole thing. I'm going to try and keep the whole presentation today a little bit sort of upbeat. I have presented on R&D over the years, and unfortunately, I can't see you guys. So I can't see if the eyes are starting to go and people are losing interest. No one seems to have tuned off yet, which is a good thing. But the knack is to try and keep it interesting and upbeat. It talks, if a company is taking a risk by attempting to resolve scientific or technological uncertainty, it may be carrying out a qualifying activity, and it could be creating new products, processes or services, changing or modifying existing product or service. So at this point, I'm going to start talking specifically about construction industry because that is the point of today's meeting. And I don't know about you, if I'm listening to a presentation, I can go along to some degree with a bit of explanation and a little bit of legislation. But you know what? I like practical examples that I can actually apply to my business or the business of my clients. So I sat down today and we do basically a lot of R&D and a lot of construction. And I've been through some of the previous claims and I thought I'm going to dig out 3 or 4 really practical examples just to give people an idea. And I'm going to talk about those examples now because I think it's a bit more interesting than just sort of reeling out sort of what the definition of R&D is per HMRC. So I'm going to give you example number 1. Example number 1 is a company that we act for. And that particular company is fairly large. It's a couple of million turnover. There's a lot of employees, but sort of not over 500, which is one of the limits that I'll talk about later. And basically they had a contract to go down to the south coast of England. And there was a very large shopping centre and their job was to basically get the floor of the shopping centre out so that then someone else could come in and lay a new floor. I don't know why they had to do it, but that was their project. And they said, okay, how you would get a floor out is pretty straightforward in normal circumstances. So they went along with all of their equipment, loads of subcontractors, and started to drill with cangos and sort of getting the floor up after putting all the screens and health and safety. And all the shopkeepers came running out at 10 o'clock in the morning and said, well, what are you doing? The amount of noise you're making, we're not going to get any customers into the centre. You can't do this. So our company said, oh, okay, that makes sense, doesn't it? We'll wait for you to close. And then they closed at 5 o'clock. And at 6 o'clock, they came back with the big cangos and started to drill everything up. And I think the police and the local council turned up and said, what are you doing? You can't make noise like this after 5 o'clock at night. So they thought, this might be a bit more interesting than we thought it was. So in the end, they had to sit down and think, how are we going to get this floor out, not using the very traditional methods of smashing it to pieces and putting it in a skip? What they come up with over a period of time was a system where they essentially cut the floor a bit like you would cut a cake with a special diamond cutter on a saw. And they were sort of sawing this thing, not making a huge amount of mess, not making a huge amount of noise, although admittedly working after hours. And they were cutting up chunks of concrete that then they would sort of get the equipment to go in and sort of lift it out and dispose of it that way. Now, it might seem like a very straightforward solution, but the point is, when the company were sort of looking to sort of design this solution, I guess they would have gone on the internet and said, is there, sort of different methods of reducing flooring in shopping centres or whatever, or taking it out? And predictably, that there wasn't anyone that had written a technical paper there. What they did was to develop a new process to actually sort of facilitate getting the floor out. And because of that, we made a claim for R&D. We explained fully what they'd done. And HMRC, said this is a new process. The information wasn't readily out there. Perhaps an important thing to note is that we're not saying that another company that's claimed R&D hasn't done the same thing. It could well have been done. We might have reinvented something that was invented before. But the main thing is, if someone did do it before, they didn't publish a paper and guidance on it where it was readily available to our guys. They had to sit down, puzzle it out, and did it, and a claim was deemed to be successful by HMRC. So that's one practical example of trying to find an alternative way of doing something that's sort of thinking outside the box. I'm going to move along to another example now. We did a claim for one of our company clients, and essentially they do a lot of work in the West End of London for a lot of the hotels and big chains that are up there. And one of the things, if you walk around the West End, bigger hotels, smaller hotels, when you get to the front door, you have these sort of like canopies that sort of reach out onto the street, and perhaps the names on the front. And they're contracted quite often to sort of, change our canopy, put something new up. Now, that isn't R&D, never would be, because there are standard building techniques to take down an old canopy, build a new canopy, put a new canopy back with the same fittings. you know, any building company that specialises in that sort of work could do it, so that there is no R&D there. But a couple of years ago, they were approached by one of the hotels up in London, and they said, we want a new canopy, but it's bigger and a lot heavier, sorry, because we want some specialist material in there. I think there was some marble and some, I don't know, but it was basically, our company said, that's fine, you can do that, but it weighs about 4 times more than it ever did before. We can't connect it to the walls. We've got to find an alternative way. We're going to have to quote you in the fee for that. And the customer said, that's fine. This is the canopy that we want. And so the company set about building the canopy and then working out how they were going to attach it. And I think the very standard system of, you know, drilling into concrete and putting raw bolts and etc., and maybe even some sort of things holding it, it just wouldn't have worked. It just would have levered itself off the building because it weighed so much. So what they had to do was to find a way to sort of really get through the outer concrete and casings and kind of get right into the structure of the building, you know, the H blocks that sort of go up that are made out of metal, and kind of connect it to the absolute internal skeleton, and then find a way, because it's been connected all the way out here, that again it didn't sort of warp or bend. And it took a lot of thinking and a lot of planning and the use of some architects as well and technical drawings, but they did it. Is that R&D? It absolutely was. We claimed R&D for that. HMRC looked at it and said, yes, we agree, this is a new process, it's something innovative. Again, we're not saying it hasn't been done before, but no one's published any guidance on how to do this. So again, think about it. It's maybe a standard job, but you've had to find an alternative way of doing it. When I speak to clients, sometimes I say that it's generally the scratching your head with a pencil is possibly the first indication it might be R&D, when you're thinking, this is what we've got to do, but we haven't quite done it that way before. We're working on a listed building, or we're working in an environment that's sort of new to us, and we've got to come up with a new way rather than a traditional way of doing this. That could be your R&D moment. That should be what you're thinking about. I've got another 2 examples. I'm going to give you one because I don't want to bore you with examples. We act for another building company. Basically, one of the things they were contracted to do, it was a very large sports centre complex, and they were sort of tasked with turning old ground into sort of like sports and pitches and 24-hour sort of pitches, etc. Trouble was, where they wanted this was actually below the water table for the area, and they realised at an early stage that they could do everything quite straightforward and put it all in, but as soon as it rained, there'd be puddles that put it completely out of action because it's below the water table. What they had to do was to design a new drainage system. So it isn't just a case of let's put a bit of gravel underneath that and it will drain off because it's below the water table. So they had to come up with a very unique and bespoke system where all the water could be sort of channeled away and pumped away, etc., purely so they could do what they had to do. And again, we've claimed R&D for that, and HMRC looked at it and they said, yes, we agree, that's R&D. It's a new process. It's a bespoke, innovative, original design. So these are examples that I regularly trot out when I talk to people. So I'm going to go to the next slide, and I'm going to start talking more now about some of the projects and some of the costs and how we would literally go about making a claim. So I'm a little bit driven by the slides now, because these are fairly good questions, because I think I did put them together actually. Can I claim for abortive R&D projects? The answer for that is yes. So it's a fairly common question. We tried to do something that's connected to our business. It hasn't worked yet. Do we have to wait for it to work until we can claim? And the answer is no. If you're actually spending money on R&D, and I'll talk about what costs are claimable for R&D in a little while, and either it hasn't come to fruition yet because it's a long-term project, or it was something that is connected to the company's trade, but it didn't quite work, you can claim for that because, as I said, R&D expenditure is claimable, whether it's successful or not. So let's go to the next slide, please. Tell me about how the SME scheme works. So let's talk a little bit about the practicalities of R&D and how we basically claim the expenditure. So first of all, let's be clear. I think there's a slide later, and I'm going to circumvent that now. Do you have to be a limited company? The answer is yes. If you're self-employed and doing R&D in your own business, can't claim. You might want to think about incorporating what you're doing. If you're a partnership or an LLP, same thing. It's a relief that's there in statute for limited companies, perfectly acceptable. It's not tax planning. It's not like, I don't know, sort of icebreaker tax schemes and Gary Barlow and anyone else that you know has been involved in tax schemes. It's not that at all. It is literally a relief for limited companies to reward companies that actually carry out innovative research and development work. The SME scheme, to not bore you, there are two schemes. There's a scheme called the Large Company Scheme. For anyone who's heard of it, it's called RDEC. We make very few claims under RDEC. It's usually for reasons of technicalities that perhaps you've received some sort of subsidy. Most companies that we act for are within the SME scheme, which is 500 employees or less, and balance sheet values of, I think, 86 million euros. And a turnover possibly of 100 million euros. I should have checked before the meeting, but you can see that most people are going to fall within the SME scheme. And that's a good thing, because SME is by far the more favourable scheme. It basically means that any of your qualifying expenditure can be enhanced by 130%. So let's be clear, if we're just talking about, say, some staffing costs, let's say you've got 10 people on the books and maybe 3 of them are doing legitimate R&D work, you can look at their salaries and you can say, okay, we've got Mr. A, Mr. B and Mrs. C, and they're all on 50,000 a year, and possibly a couple of them are at 50%, maybe someone's on a bit less. You can look at those costs and think, right, well, okay, 50 grand salary times 50% is 25,000. We can look at their employer pension contributions. We can look at the employer's national insurance contributions as well. And ultimately, we can get a qualifying cost. How does it work in practice? Well, if you think about it, their wages costs are already in the company's accounts. There'll be a line which says salaries and national insurance and whatever. Their costs are already in there. What we then do is to say, right, well, okay, in addition to those salary costs being claimed in the normal accounts, the enhanced R&D element of the cost is kind of claimable again. We don't have to restate the accounts, that's not necessary, but the company's tax computation, where, for those of you who are connected with limited companies and think, I know what he's talking about, you start off with the profit per the accounts and you add back what you can't claim, like depreciation or entertaining, and then you deduct what's not in the accounts that you can claim, which is capital allowances on cars and equipment, etc. There's basically a further line. And do you do R&D? Have you got any costs that you want to claim? In this case, this hypothetical case of salaries, it would be 50,000 times a half, looking at the other costs. And then there might be some other salaries as well. And we might get to a figure of, say, 100,000, which is possibly a bit low to what we usually do, but in this example, this 100,000 might become then 130,000, and it will reduce the company's existing profits. So that's less that you've got to pay going forward, or if you have paid it, it could be a repayment from HMRC if they agree the claim. So for us anyway, and in fact any R&D practitioner, the process is fairly straightforward. The first thing you have to do is identify, are you actually doing R&D work? And to be honest, from that, the costs can follow on. And I will touch base a little bit later in terms of what costs there are. So that's very, very simply how the SME scheme works. We'll go to the next slide. Yeah, I knew this was going to crop up. I've hit this a little bit earlier, haven't I? Can I claim it for sole trader? No, you can't. I'll go straight to the next slide. I'm not going to repeat all of that. What do HMRC want to see from an R&D tax claim is a very good question. So for my sins in a former life, when I was in HMRC, I did a little bit of R&D. I was mainly investigations. I did a bit of R&D, and there is kind of a set format to what HMRC want to see. they want to know what the R&D activity is. If you want to just submit a whole lot of costs and not say what you're doing, I think you can expect a letter back to say, do you want to justify these costs? So any claim should have a good explanation about what the issue was in science and technology, how it was resolved, what you did. It hasn't got to be a book. Quite often our technical reports might be no more than 3 or 4 pages on A4 Word. Quite often we would pull them together ourselves, although sometimes we need the directors and the technical guys to help us with that. And they'll want to see a breakdown of the costs. Now, I'm going to come to the costs in a minute, because looking forward on my slides, I can see it's about 2 away, so I'll perhaps wait until we get there. But yes, they would want to see a breakdown of the costs. They would kind of want to see a before and after in terms of tax. This is what the profits were. This is what the revised profit or the loss is. And we would list everything out. And personally, as a firm, we actually make a separate submission to the HMRC R&D centres to explain everything and to give them a nice breakdown. So if I can go through 2 slides, if I may. The first is just the threshold for SME, and now perfect. What costs can be claimed? So this is where it gets interesting. So let's just say that we are a limited company, just to remind you, and that we are doing a qualifying activity. At this point, your R&D advisor will be very interested to talk through what sort of costs that you can claim. And I'm going to run through them one by one. I've touched on staffing costs. This is an employee of the company. It can include a director. And we're looking, as I said, about the salary costs. We're talking about employers' national insurance, pension costs. I'm not going to go into any further details about reimbursed travelling expenses, etc., because that would take too long to explain. But these are your core costs. And if you have someone who is an employee doing R&D, it is perfectly acceptable to look at their staffing costs, the other costs that I mentioned, and then to have a long chat with the R&D advisor to try and come up with an accurate estimate of the percentage of time that they spend on R&D. You would be surprised. Some people might think it's only 1 or 2%, but a lot of our claims, when you actually get into it and really examine what the R&D is, it can be as much as 30, 40, 50% and higher in some cases. Don't get me wrong, if you've got 10 employees and you want to claim that all of them are doing R&D and most of them at 90%, any decent advisor would steer you away from that. HMRC would obviously look at that and say, that's pretty doubtful, isn't it? If you've got a credit controller, why are you claiming 70% of their time when really their job is credit control? They shouldn't be there anyway. Similarly, with a director, you wouldn't have a director at 100% because a director has to control the company and do all sorts of things. It's a case of coming up with something that's reasonable that HMRC will accept. I'm going to move to the next one, subcontracted R&D costs. Sorry, Charlie, I want to take you back. It was the second one on the list. So do you want to go back? One after that, I think. There you go. Okay, you just, Charlie, stand back from the mouse, my friend. You can't get the help. So anyway, subcontracted R&D costs. What's a subcontractor? It's what it says on the tin. It's someone that works for you that isn't on the books. It can be the big guy that goes out and drills the holes on site, literally. But if you've got someone who isn't working for you but helps with a specific project, then you can attach the payments that you make to that subcontractor. There is a restriction to 65%, which I'm always struggling to explain why that is, other than it's in statute. But you can look at subcontracted costs. There are some rules. Can you be connected to the subcontractor? The answer is yes, but there are some other restricted costs that you need to look at. I'm not going to go into that because, trust me, I will bore you. A subcontractor doesn't have to be what you imagine a subcontractor is, which is a guy out on a building site. It can be a third party. It can also be, if there's some sort of testing that's gone on at a university premises or something, it can even be that. Externally provided workers, I think it's easier to think of that, to be honest, as agency workers. This is someone who is essentially subject to a sort of contract of employment, treated like a pay-as-you-earn person, but they're not employed directly, you can claim those costs. And again, there's a restriction to 65%, but don't let that put you off, because a cost is a cost after all. Consumables is a really interesting one to consider in the construction industry. So what is a consumed cost? A consumed cost, a consumed material, is if you end up taking something out of stock, be it a lump of metal or concrete or whatever. Maybe you've built a prototype, maybe you've taken something out of stock, and at the end of what you've done and testing whether it works, you're left with something that's unsaleable or needs to be thrown away or put on a shelf and probably never used again. If you like, the cost of those materials have been consumed for the purpose of R&D, and you can claim it. It also applies to some of the light and heat costs for the business, although, to be honest, that's a very small part of a claim, if I'm being honest. So yeah, consumables, it is worth, if you are carrying out R&D, maybe trying to create a separate nominal code, keeping a record of the stuff that's actually being used in the prototypes or putting things together. So again, consumables can be claimed. Software, if directly connected to the R&D activity, can be claimed. Certain energy costs I've literally just covered, which is generally the light and heat for the business. If you have a little R&D section, or you've got people doing R&D, it's reasonable to look at the light and heat costs within a business and sort of attach some of that on a reasonable basis. It's not going to be all of it, but a small proportion. Briefly, with consumables, I get asked a lot, well, but I've had to buy a book, or I've had to, you know, sort of go and buy a paper or a magazine to help me. Surely I can claim that. It would make sense, wouldn't it? But you can't, because it's not consumed in the process. If you buy a book and read it, you don't then burn it. It generally sits on a shelf or gets given to someone else. It's not consumed in the process, even though it might be used in the process. Similarly, if you have legal costs, which relate to sort of possibly registering some sort of trademark or whatever, it would feel like that's R&D, but actually it isn't. But having said that, don't get too upset, because the costs that I've mentioned, staff costs, subcontracted costs, externally provided workers to a degree, but certainly consumables, you can certainly put in a reasonable sort of claim to HMRC with the costs that are allowable just within those categories. So next slide, please, Charlie, in the background. Will claiming R&D affect my accounts? Another great question. The answer is no, not really. What you don't do with R&D, once you've established that you have a qualifying activity and you have costs, and perhaps you're going back to an earlier set of accounts because you have 2 years to claim from the end of your year, you don't have to restate the accounts. In fact, if you have a bit of a bookkeeping head on you, how could you do that? You can't put extra expenses into a set of accounts and balance it off. You need something on the other side. It's a computational adjustment. Your accountant or R&D advisor will basically go back to the computation that was submitted and claim these extra R&D costs with all of the background and schedules and reports for the R&D purposes. But you don't need to restate the accounts. Going forward on a highly technical point, basically, in terms of the tax provision, it might change in future years, but I'm not going to talk about that because that's incredibly dull. I think the answer is, don't think that you've got to go away and get everything redone, because you really haven't. Charlie, next slide, my man. Can I claim retrospectively? Yeah, as I touched on earlier, the claim period is 2 years from the end of the period in which the R&D activity happens. So let's just say, for example, we're looking at the end of April. Company's got a 30th of April accounting date. 30th of April 18 went out of date on the 30th of April 2020 to claim. And I have to be honest, there isn't any clever way to reach back and get something that's out of date. If you try and submit some sort of overpayments claim or an amendment, HMRC will just say no. It wasn't designed for that. 30th of April 19, you can claim, but just be aware you would be running out of time, because on the 30th of April 21, in about 15 days time, you would run out of date. So there's a constant, it's 2 years after the end of the year that you can claim. If you have a company and haven't claimed before, generally speaking, your first claim is going to consist of 2 years, which is the accounts that you've done and probably the accounts that you're working on at the moment. After that, it's always going to be 1 year if you're claiming on a regular basis. So next slide. I don't keep a record of my R&D, and does this prevent me from claiming? No, it doesn't. But let's just bear in mind that HMRC does look at each and every R&D claim that's submitted. Admittedly, they haven't got very long to look at claims. I think the last time I was speaking to an R&D inspector, they said they broadly have about 8 minutes to look at a claim and decide if they need to ask any questions or they approve it, which is not very long. Having said that, any decent R&D practitioner will introduce reasonable estimates of cost. I'll be honest, when it comes to looking at staffing costs, you might say, I've got no records. Well, you will have a record of costs because you'll have P60 or wages payments. We can calculate the employer's national insurance if that figure isn't to hand, and you'll know what pension has been paid by the company. As for the percentage, very, very few companies actually keep a record of the time that people spend. So it's down to the practitioner, the R&D specialist, in other words, and the director to come up with a reasonable estimate of the people that do R&D and what their percentage is. In terms of the consumable costs, I have got clients that actually keep a record religiously of everything that's used in the process. Other clients, particularly in first year claims, say, look, we've done this, we've done that, we've built that prototype, we put that up, that didn't quite work, we had to take it down, we had to do it again. HMRC are not unreasonable people. They will accept reasonable estimates. Have to be reasonable though, at the risk of stating the obvious. If you've got a turnover of $500,000 and a cost of sales of 200,000, let's not be claiming 150,000 as relating to R&D, because it just looks completely wrong. You just have to look at it, put in a reasonable estimate, let HMRC know on what basis you've made the estimate, which frankly is our job as the R&D specialist to explain what that is. So yeah, not keeping a record is not an issue going forward. It's a good idea, but don't let it put you off. Next slide, please, Charlie. I've capitalized some of my R&D costs. Can I still include them in the claim? The answer is yes, but let me just go a little bit further as to what capitalized costs are. So if you have an asset that's used for R&D, like a machine, even a particular building that you've bought, these things would qualify for research and development allowances, which are called RDAs. For anyone who sort of knows anything about tax or is interested in it, it's a kind of similar concept to the annual investment allowance, AIAs. In other words, RDAs, you can get 100% cost of the asset, but it's not enhanced. Why is it there if we have AIAs? Well, to be honest, it runs alongside AIA. If you've reached the limit as to what you can claim under AIA, and you've got something that qualifies for RDA, you can call it RDA and sort of claim that instead. But that isn't the purpose of what we were saying here. When we've said we've capitalized some of my R&D costs, it does occasionally happen that companies choose, or the accountants choose, to amortize the cost of the R&D and put it in as an intangible asset in the company's balance sheet. And you might think, well, that's going to be a problem then, because if I've got costs that are not already in profit and loss and they've been amortized and treated as capital, presumably I can't claim. You would be wrong, he said. The finger was wagging. No, you can claim the cost, and there is a sexy bit of legislation that I can't quite remember. I think it's around about the 1200 CTA 09 mark, or 1250. And it basically says if you've capitalized the costs, you can claim 230%. In other words, you can get to a position if it had been in the profit and loss account in the first place. So yes, the answer is yes, you can. Charlie, next slide, please. what salary costs can I claim? I think I'm not going to go into a lot of detail with that because I've covered it already, but yet legitimate salary costs, including directors, including the company's pension contributions, and including the national insurance, which again we could calculate. I think we can flick through the next couple, to be honest, because I've covered them. So yeah, that subcontracted. Again, I think I've covered consumables. I definitely have, so we can move past that. There you go. The all-important question. How long does it take to get the money back after I submit a claim? It depends very much on how much work HMRC has on. By and large, no matter what you might think of HMRC, and I have to admit I'm a very pro-HMRC person. I think they do a great job, to be honest, most of the time. The R&D unit, they're actually staffed by some really good people, and I feel sorry for them when they're busy. They will commit to looking at it in 4 weeks. Sometimes it runs to 6, 7, 8 weeks just because of the volume of claims that they have. Having said that, I submitted a claim literally 2 weeks ago, and I got notification today that it had been processed and the company had had a repayment of corporation tax, and they turned that around in a week. I would think that by and large you want to sort of think it's going to be a month. That's broadly what you're looking at. One small thing, I'm going to have a little gripe here, just generally. There are a lot of R&D companies out there. A lot of them are really, really good and know completely what they're doing. A lot of them are a lot bigger than we are as a firm. We probably do between 4 and 6 claims every month, possibly a little bit more than that now, thinking about it. But there is this sort of like rush of much smaller companies that have cropped up where it seems you can literally go online, type in some figures, and then it will say, yeah, this is your claim. And very little work is done to actually sort of justify whether you're doing R&D. It's just purely like an algorithm that says if you have 50 grand staff costs and you've got 75% work on R&D, this is what your figure is. Anyone could do that with a calculator. I know for a fact that HMRC are looking very closely at these companies. So I'm only saying if you end up deciding I'm going to save a few quid on fees and go to something where I just fill some figures in online and click a send button, you can probably expect a letter from HMRC because they are absolutely tightening up. A lot of companies are actually receiving letters where they've claimed in the past to say, just to make sure you are doing R&D, you are using an advisor, you're making sure that your costs are good. And I wholeheartedly support that, because I think when you're a fully professional R&D firm like we are, and like many of the others that do it full time, it kind of takes the cowboys out of the market. But anyway, rant over. I've got that out of my system. It's good to let it go. Next slide, please. Can my claim trigger an inquiry by HMRC? I have to be honest and say yes. I can't say that once you submit it, it will automatically be agreed. What I would say is, us as a firm, I've been doing at Raffingers R&D for what, 5, 6 years now. And at my previous firm, I was doing it for the best part of 10 years as well. I haven't seen an inquiry in all that time that's arisen solely because of R&D. And the reason is because we do it right, and the other R&D companies, I'm sure, might get some inquiries, but they do it right. It can do. They could possibly write out and say, we want a bit more detail about the R&D activity. We're not sure about some of the costs that you're claiming. All I can say is that certainly I can't remember the last time I had anything from HMRC, and I don't think I've had anything since I've been at Raffingers, which is about 6 years. But that's only because we are a reputable firm and we do the claim in the right way. So I'll move on from that. Next slide, please. So what's our process? I'm not going to read all of that out, but it is basically what it says on the tin. So I get clients that are already at Raffingers that hadn't thought about R&D, and I'll go and see them. I'm going to see someone tomorrow to do that. I also get some inquiries from people who are not connected with Raffingers, and their first question is, look, I've mentioned it to my accountant. I don't want to change. He's a good accountant. He just doesn't get R&D. He wants me to find someone else just to deal with that. Is that something you can do, Neil? And the answer is yes, we do that all of the time. What we would do is, if you were in drivable or trainable distance, I would come and see you, or if not, we'd jump on a Zoom call and literally talk through what it is that you think you do, and we'll explore that in detail. If we think that is R&D qualifying, then it's a process where we just work closely together for a period of months, probably. I would need to speak to your accountant and get copies of the accounts so I can see what your profits are, what your costs are. We talk about the employees, the subcontractors, the consumable materials and the activities, and go through and work out, is it worthwhile doing? On some cases, I've come across companies that are doing R&D, but they just don't have the cost base. But we've talked about it going forward. So possibly a claim might be made, possibly we might get some employees in there, possibly the directors might start getting a salary. That's perfectly acceptable. We just work it through from start to finish. As I said, we don't need to be your accountant in terms of taking you on and doing your accounts. As long as I've got accounts to work with, as long as I've got the tax computations that are done by your accountant, we can mirror them in our own tax software. Then we plug the R&D in, then we submit it, and we go back to yourself and your accountant when there's been a check in the post and say, this was successful. These are the adjustments you just need to make going forward in terms of possibly losses or tax credits. So that is our process. Our fee basis, I'm not sure. Oh, look, there you go. It actually says that. Like everyone else in this particular industry, we work on a contingent basis. I'm not going to lie and say that we're miles better than everyone else. There is a big pack of people that are in the pack, and we're pretty much in the same pack. We're better than quite a few. There's a few that are slightly better than us. It's a contingent basis. We don't charge anyone unless we're successful. We don't want anything up front. And it's basically that. I think it's in everyone's interest to get the right claim for the right figures, to get it agreed. Obviously, we're happy because we've earned a fee, and we're even more happy because we've saved you a whole lot of money. And then hopefully you'll come back to us next year and we'll do it all again. Where we are slightly different to a lot of the pack is we work on the basis that after a first claim, there's something of a carbon footprint that's gone in with HMRC. So a second claim is basically more likely to go through and be accepted, even though frankly our success rate is 100% and they've all gone through. The point is, subsequent years R&D we will reduce slightly, and I don't think many other companies do that. So next slide, I think, is just to finish off with it. Yeah, you go, all about me, all about me. So I believe my contact details are there. If you're listening to this and you think, I'd just like to have a bit of a chat, talk about what I do, maybe there's some R&D, maybe there isn't, I'd be delighted to hear from you. I love talking to people. It beats work. I don't even mind popping out and seeing people, because that definitely beats work. But you've got my email. Drop me an email with your question. I'll come back to you. If it's not today, it'll be tomorrow or at some point over the weekend, because I'm usually in. It would be great to hear from you. And I'm going to leave it at that point and say thank you very much for tuning in. I think at one point we possibly went over 300. We lost a few. So there you go. That's just the R&D war. You're always going to get a few casualties when you start talking about boring stuff. But I hope it was interesting for you. Please get in touch if you've got any questions. And I wish you well. Happy R&D. Many thanks.